We're going to make another guest switch here. Again, we want to remind you, you're watching Money TV. If you want more information, go to our website, moneytv.net. Joined in studio now by Roger Schlesinger. He is the Mortgage Minute Guy. Roger, always good to see you.
Good to see you. And by the way, Don, I was watching the previous segment while you were shooting it, and that's a terrific deal because I do a lot of financial planning with people. Other than just selling a mortgage, I try to put a complete financial plan together. And I won't do it unless they have life insurance, because what's the use? You put together a financial plan and somebody dies, the husband, the wife, and they're wiped out. So there's no need. So I think that's a really good service.
I was astounded to learn that there are that many people in our country that don't have a life insurance policy. I was astounded to
I'll
hear
give you
that.
another astounding figure. How many people do you think, percentage-wise, own their house free and clear in this country?
Percentage-wise, I'll say less than 5%.
50%.
50% own their house free and clear.
50% own their house
Wow.
free and clear.
I'm not in that group.
No, but basically the people on the coast aren't in that group.
Right.
It's the people in the Midwest, in between the coast, where you can get a decent house for $150,000, and eventually you pay it off and you're there. And I bring that up because one of the things that we have to watch out for, especially in the mortgage business, is that we could lose that home mortgage deduction, the interest, real quick because there's no constituency for it. I mean, yes, we have 50% of the people, but they're located in a smaller area, and the other people say, well, why do we need it for? Why do we need it? And then to add to it, of the 50% that do have mortgages, about 80% of them have conforming limits. So yes, we may get to save something. It would be the conforming limits, and by the way, conforming limits are coming lower, not going higher next year.
Well, we have a federal government that spends $1 trillion plus more than we take in, and of course Harry Reid wants to increase taxes by $1 trillion to cover that. Where are they going to find those tax increases? One of them, of course, would be to eliminate the home mortgage deduction.
Right. At least take it down to conforming limits, which looks like it's going to be around 400,000, not 417. And so I'm telling people now we have unbelievable rates. We're back down to almost the 30, 40, 50, whatever, how many years you want to call it, lows. And we have that crisis coming that we could be losing that. We also have harder underwriting rules taking place. So now is the time to really do something. And I got to tell you, I'm very proud of a loan that we're just doing right now. It's for irrevocable trust. Now, up until 6 months ago, if someone called and said, I have an irrevocable trust, can you get me a loan? I would say, no, we can't do it. Because you can't change an irrevocable trust. So you can't do the types of things that lenders want.
Right.
But we have a lender who did it, and we pulled $1 million cash out. Now the house was worth $10 million,
Of course.
and we only had a $1 million loan, but we pulled another $1 million out, and it was easy. So although things are tightening up, a lot of things are getting easier at the same time. So my message is this: don't take yourself out of the game. At least call us, and we'll tell you whether we can do some of these crazy things that you thought up to now can't be done.
Well, I talked about this on the opening of the program last week, and of course it did come to fruition this week that the Fed was not going to be tapering their buying of bonds. That's keeping the interest rates at this artificial low levels that we're seeing. I mean, we realize that that's not really the cost of money, but they're printing enough money into the supply to keep it low. That's got to help your business.
It does, but I have to point out to people what that's akin to. You have a company that you're manufacturing furniture. You make beautiful tables and beautiful chests of drawers, beautiful beds, and you buy them all yourself. You got a whopping business going. However, I don't know how you get to the bottom line there. And that's exactly what we're doing. We're printing the money and then we're buying it.
Right.
So it's silly what's going on. It's not really helping anything. And when they change it, it's going to hurt a lot.
Well, it's going to be a dramatic change in the way things are being done, because right now the government is buying things and investors aren't. And if we allowed it to go to supply and demand, the prices would come crashing down and interest rates would go skyrocketing. And this practice that they keep going along, and frankly, some people are thinking they're not going to taper, they're actually going to increase their buying.
Well, I think they will. If Janet Yellen comes in, I think they will increase it to really give it the one last punch and see if that it can do anything. And when you add that to Obamacare and all of the people who are getting laid off or put on part-time, this is going to be a real circus.
Yeah.
I really don't know how it's going to end, but it's really going to be unusual.
Well, as I said at the top of the program, the Trojan wall of media protection for Obama is crumbling in the wake of everything that's going on. Once again, Roger Schlesinger, he's known as the Mortgage Minute Guy. Their website is mortgageminuteguy.com if you want more information. Real quickly, what can they find out at your website?
MortgageMinuteGuy.com. Go on there, click on where it says find a mortgage consultant, and we'll get right back to you and give you all the information that we have.
MortgageMinuteGuy.com, Roger Schlesinger. He is the Mortgage Minute Guy. Roger, thanks so much.
Thank you, Don.